All right, so this second part looks at the financial projections. That's just this one financial template down here. Most of the other things below it are actually on this projection template as one of the tabs. I have it in Sheets for you, but also here it is in Excel. One of the first things you could need to do if you downloaded it is just to enable editing so you can write into it. This first page is actually a description of how it works, and so I would encourage you to read through it. But where you see dark orange, you should be putting things in. The preparer's name in this case, go ahead and use your team name so I'm 100% sure who gets credit, as the team, but the company name should be whatever you're encouraging uh, Uganda Water to use for this project. Orange, you can enter data, but you don't have to, and light orange, that is. Dark orange is where you definitely have to add. And then a lot of stuff is calculated for you. It's the easiest set of financials I've seen, but I will tell you sometimes the formulas mess up. Fortunately, a lot of our accounting students have some good experience and only will gain further experience with Excel. And so if you uncover a problem, let me know. But hopefully if you encounter one, you can solve it. So in this bright area, you would fill in any assumptions of costs. This is the starting point. What are you going to need to spend even before you open, before day one? They've got some depreciation. Those are in years, so that's the kind of thing you could change, but don't have to. They've put in an estimate. And so if you're not sure what to do, leave those as they are. We can adjust those assumptions later very easily if we want to change something in light orange. Then you have to figure out, so on the front end, what are we going to buy in fixed assets and what do we need for operating expenses? Under working capital, I want you to have 3 months. Some places will allow you to type notes like over here, so you could put in 3 months. Worth of working capital. If you don't make any sales in the first 3 months, you want to have some money so you can keep the business operating, or if you have minimal sales compared to your cash outlays, your expenses. So over here is where we talk about where the money's coming from, and we're going to assume that all of it is fundraised at this point, and that we might be able to start with less and then roll any sales back into keeping this business going, but we're not going to assume any debt at this point. All of it's going to come from resources secured by Uganda Water, but it will check at the bottom to make sure that those two actually balance or equal each other. You're going to go to payroll, and in payroll, you're going to think about, okay, how many employees are you going to have? I think you should be considering at least a salesperson and someone to manage inventory and things. But the more salespeople, the more you're going to disperse that, the more you might need a trainer. And sales forces can be paid a base wage, a commission, a combination. It might make sense to only pay them based off of sales to begin with, and then give someone who already works for Uganda Water a chance to do the training and development. And maybe inventory management if that's possible. It'll keep payroll really low. Special things that are calculated for you, there's all these payroll taxes and benefits. So this is really tied to the US, but it's okay to leave as it is. If we uncover some more realities and we need to adjust this, we could do it later. But you'll see that it's going to add another 11.7% of costs because of things like Social Security and state unemployment tax and things like that. When we come over to payroll for years 2 and 3, so wherever you do year 1, a lot more detail information, but you're still really putting in information here. Average hour pay, so we have to think hourly and how many hours per week we think each person. So if I thought 3 full-time employees working an average of 40 hours a week, I'd put 40 here for $10. If I did that 10 dollars an hour and 40 hours a week, it will calculate everything else out for me. When I get over to payroll 2 and 3, and whatever you see kind of years 2 and 3, usually there's just some automatic assumptions and you have to decide if you agree with those. In this case, it's really about the growth rate in your workforce. So they're thinking 20% growth in year 2, another 30% growth in year 3, and that's going to be tied to your sales forecast as well. So you're going to need more people. The more you're selling, less less you're selling. Units always put 1, but here we're going to have the filter is one of our product lines. Later, maybe there's something else we're selling. Maybe we're selling jerry cans. Maybe we're selling tablets to chlorinate. Those are just ideas, but the filter is the one we'll know. And we're going to sell them in batches of 1, so 1 unit. And what does it cost? And we're saying you got to decide, are you going to use dollars or Ugandan currency? And so I would personally just use dollars. I think most of us are going to think that way, and then they'll have to convert them. But do note somewhere what the current exchange rate is. So you can always right click and add a note in places. And so I often will do that over here where I might insert a note and wherever I'm able to do that. It's not easy in this. They've fixed a lot of the cells. What is the price per unit? I think we had talked $40, but you can check. I'm sorry, that's the sales price was about 50 US and the cost of goods is 40. Now, because we know that, we've actually done a lot of our costs. If you put them in other places, you're going to double count costs and you will never be able to make money. When we get down here, filter sold, we can put them down by month. I think the last part of the year, we should expect to sell more of the 1,000 in this first year, but you should all have 1,000 that is the goal to sell, with more later in the year because of all that's happening with coronavirus. So let's start it with January, February, March. We're here. 125 are in country. Maybe they'll sell during this time, but most of it will happen, I think, months 7 through 12. Sales forecast then for the next 2 years is here, and there's a little trick. You got to come back here and say, what's the growth rate? So they're only assuming 10% growth rate. So you'd sell 1,100 year 2, and 1,200 and 20 or something year 3. You might have a faster growth rate than that, but that's how you change this. You literally just are changing the growth rate in years 2 and 3 of sales. Then we get into some additional inputs. This is if they're going to need some equipment and things they don't have in the future. Maybe they're going to need another vehicle to do distribution. And so you can think about that. For year 1, no additional inputs for sure. And so operational expenses, they've got a list here. Let's see if we can turn this to something else. All right, we could. So you can make at least some of these fields can be changed to customize to what expenses you see. But I'm going to tell you that be careful not to include expenses that are related to buying the product, because way back here we did cost of goods sold. We've already built that in. It's already going to be factored in. So don't do that in operational expenses. So there's not going to be any loan money, but we'll probably do some money towards travel to get product in country, maybe some office expenses, etc. But these you're going to keep as meager as you can while doing what we need. Similarly, in years 2 and 3, you're just looking at what would be your estimated percent increase in each of those categories. Just leave them where they are for now if you're not sure. That's perfectly fine. So then we get into cash flow, and we're going to start looking and saying, okay, when do we need to buy and add inventory, and what's the cost point for that? That's a big deal. When is Uganda Water going to start trying to pull some money out of this, or are they going to just keep reinvesting it all? So that's what some of these lines are getting at. And when you get back to the cash flow really emphasizes how much money is coming in, how much money is going out every month, so I can see if I run into a deficit and start to need a line of credit or need to find a new source for donors on behalf of Uganda Water for them to make this work, because sometimes early on you're spending more than you're making. We get into the income statement. You'll notice there's nothing orange here. It calculates 100% for you if everything else was done right. Same for years 2 and 3. Same for the balance sheet. Same for the balance sheet. If we keep going out this way, um, uh, the break-even analysis is calculated for you, and that's just a good gut check to see, can you really think you sell that much to get to break even? If not, we have to refine the business model to control costs. There's some ratios that begin to be calculated for you. And then if you went out and did some research through like IBIS World or MarketLine and could find some sort of industry standard, you could plug that in just to see how the company compares to it. There's a diagnostic tool that's all about some assumptions within all of these calculations, and they give you a little bit of findings and what they think is healthy or not. If you're not sure what cost of goods are and you want to try and calculate those out, you could use this sheet to do that. And there's an amortization and depreciation schedule if you have assets that are amortized or depreciated. And then revision notes are really for people who've updated this document to try and make it work better. And so there's some notes there that you can ignore. I hope that gave you a little bit of help on how to navigate through this. You are going to have to make sure that it keeps going with the written part of the plan. So it's kind of a back and forth between these two to make sure the story they are telling is the same story. All right, hope that helps, and I'll look forward to talking with you more as you work on your documents.